Last week, Reliance Industries has announced the formation of Jio Financial Services. It's a demerger. What's a demerger? We'll talk about it later. But it's formed India's second largest NBFC.
Reliance Industries is planning to demerge its financial services business soon.
Big event over the next 48 hours is going to be the demerger of Jio Financial Services from Reliance Industries.
Demerger of Jio Financial Services from Reliance Industries will be concluded today.
Earlier this month, HDFC and HDFC Bank have merged to form India's largest banking company by market cap. It's about 12 trillion. SBI is half, about 6.5 trillion. So, what's happening in the Indian banking space? And is the cozy club of industrialists basically breaking up? We examine in this issue of On Point. Sometime earlier, India's former Deputy Governor of RBI, Viral Acharya, made a stunning suggestion. He said 5 of India's leading industrial groups, which are they? Reliance Industries, the Tata Group, Adani Group, the Aditya Birla Group and the Bharti should gracefully demerge. His words, gracefully demerge. He didn't mention HDFC Group at all. Where did this one come from? First of all, he spoke out, or rather too ahead of his time. Demerger is not what is required. But the interesting thing is, he did not mention any of India's banks. Why? The reason is clear. Indian banking sector is not known to be big. There are some banks, there are private sector banks, there are public sector banks. They operate within their orbit, giving out basically consumer loans to the salaried. Then there are the insurance companies. What do? Well, the same salaried class, they give out policies. And then there are the NBFCs. What do? They again give out loans to more or less the same group for buying autos, for buying FMCG groups, goods and so on. Essentially, it's a cozy club. Essentially, it is a reflection of an India which had been, going along in a very middle class sort of way between 2 trillion, 2.5 trillion, and that's about it. These are not big banks. It was a good life for them because, why do we say good life? Because the government run public sector banks or the insurance companies or the NBFCs have been run to the ground. I mean, think about what's happened with, say, PNB, BOB despite the merger. The insurance companies like Oriental or United India Insurance, their net worth blown away, and NBFCs like Power Finance Corporation and REC are simply there because the government wishes them to be there. There's essentially no competition, and that picture has changed. We say change. What has changed? Well, 3 things. First of all, there's competition coming from the fintech space or the larger new banking space. They are eating up banks big time. The second thing, the introduction of what is called the Reserve Bank or the central bank digital currency, not just by RBI but by other banks. What is that doing? It's essentially creating a parallel currency. Now remember, banks were the font from where currency used to come or the credit used to come. The credit would be the basic source, the biggest source for creation of money in the economy. If a central bank digital currency comes, that primary role for the banks go off. What's the third thing that's happening? The third thing is that there was a regulatory arbitrage between banks and the NBFCs. The Reserve Bank of India has killed that. So essentially, the percentage, the advantage which the NBFCs had of a lighter regulatory role vis-a-vis banks has got finished. So a housing finance company, in this case HDFC, doesn't really have too much of an advantage. It makes much more advantage to come within HDFC Bank and get access to its capital, to its large diversified retail base, essentially making it a much bigger entity, a combined entity which is now very big, and it can actually become one of the world's large banks. What happened to RIL? RIL wanted a bank. It didn't get that. Instead, what it has done is, as soon as it knew that HDFC would be ceding the space, it moved into the space of the NBFCs in a different, looking at the business from a different point of view. It's not going to use regulatory arbitrage. Instead, the advantage that RIL has of again of a large retail base, remember the Jio Telecom base, which is massive, the Reliance retail base, use all of that to spin off on the Jio Financial Services as an NBFC. It will give out loans, but will give out loans to a much larger base than just the salaried structure. That's the reason why Jio Financial Services has got basically not listed as yet, but its valuation has been put at rupees 261.85 a share. That's a massive premium compared to what the analysts were thinking, which was roughly around between 150 to 160, give and take a few rupees here and there. And why is it so? Because by its very inception, Jio Financial Services gets access to the Reliance mother company in terms of its valuation, in terms of the access to its resources, to make it competitor with the largest in the market, which is the Bajaj Financial. Now we are not getting into who will be the bigger, but what you can see is happening is very different. The big storyline for the Indian economy is that Indian industrial groups have ceased being soft with each other. Now, in this scale of move, it's not surprising that two of the industry veterans, Mukesh Ambani and Deepak Parekh, have realized the scale and have gone in for the changes that they needed to make. Remember, these are not knee-jerk moves. These are thought through. They have been announced now, but they have taken time to mature. But this is what shows that the Indian industrial sector, or the Indian Incorporated or India Inc., whichever way you want to say, is actually sensing opportunity to grow big. They are growing big, they are making the moves, and very important, they are not staying on to be a cozy club where everyone gives other the space to stay around and nobody really makes a dramatic move to take on competition. Now remember, not all the changes as we speak will be that beneficial. For instance, to take an example in the banking space, IDFC has merged or is merging with IDFC First Bank, but that's not creating much of a ripples. At the same time, Bandhan Bank, the bank which actually brought microfinance onto the main street, is actually in trouble. When the Nifty index, including the BankX, is actually moving up, Bandhan is actually seeing a tanking of its shares. Why? Because its profit has come down. Now, next time it might rise, but the point is that just being the big one won't help. There's competition at the doorstep. And this is the big change which is making people think that there is a difference coming up in the Indian economy. Now, you've seen in the newspapers, you've seen in the media interviews, lots of commentators from within India, but more so from outside, talking about India's time, India's ability to make, its move right now. The World Bank President Ajay Banga also made the same comment at Gandhinagar this week.
India is doing a lot of things which has allowed it to stay ahead. Most countries would be very happy with the 7% growth rate in this environment.
But why are they saying so? Well, principally, these two examples show why are they saying so. Again, I said it's not about mergers, but it is the ability to first of all grow big. That's one. Second, it is the ability to have creative destruction. In the original words of Joseph Schumpeter, that companies must grow and companies must also get destroyed. There should be reallocation of capital. In the creation of these two large financial entities, you can be very sure that lots of others will bite the dust. That is essential. If an economy has to grow at a scale at which India hopes to grow, then you can be sure that these sort of monster developments will be more and more visible. And there will also be destruction, as I said. For instance, the Adani Group came very close to being destroyed, and it had to reshape itself very strongly. So there are risks, there are issues, but there are opportunities. And that is what is happening in the Indian financial sector, and that's what makes it so interesting right now. And on this issue, we'll close on this edition of On Point.